What's going on, guys? So before I went to bed tonight, I figured, you know what? I'm going to make a video for you guys. So what I'm going to show you guys is really an overview of all the sectors that I have invested in, and then we can kind of go into exactly individual stocks that I have in each of those sectors. So what I like to generally do is between each one of my investments, I write down what sector it's in, and I have this lookup table that really puts everything into perspective and organizes things so that you can really see things in terms of how much value it is in the portfolio, what kind of income percentage it's coming by each individual sector. And then I like to make pie graphs and whatnot so that everyone can have a great visualization as to what they need. So, looking at the table, and then we can look at the pie graphs to the right. Most of my income is coming from energy sectors, financials, real estate, with an increasing amount in telecommunication services. Energy is highly the most of my income. It's a 37% chunk of it. But then also consumer staples is a good bit. Really the only places I'm lacking is consumer discretionary, healthcare, which generally speaking is a very profitable sector, which is something I've probably been missing out on. Industrials, information technology, but that's not for lack of investment. It's 6.5% of my total portfolio. Materials, once again, still decent chunk of change invested. In fact, generally a good amount of income for how much I have invested. And utilities. Reason why utilities are low, I really only have one or two. Should I invest in maybe more energy companies or what have you? Probably, but I do a lot of energy investing and they kind of overlap some parts. Not at all entirely, but it is what it is. And then you see that I also have a very large chunk of cash on hand, and that's just based off of my 401k, or I'm sorry, my Roth IRA contributions. And I will make a video on that rather soon, while it's kind of getting fully funded and everything like that. So in terms of what it actually looks like in a pie chart, on the left-hand side I have the sector weight percentage in terms of what amount of sector I have as a percentage of my portfolio, and on the right is more income. So that large green block that you see corresponds to energy sector. So I know it's a very large weight percentage in terms of income and weight percentage. Consumer staples is also quite large. Financials are getting up there. Real estate's up there. Information technology is a large weight percentage, but not a very large income percentage. And telecommunications is also up there in terms of income. And that's large investments in AT&T and Verizon. Cash is also one of my larger pieces, or it's kind of holding up the rear, but in terms of the bottom half of my portfolio. But it only provides about 1.8% of my income at the moment. So actually looking at all the different stocks, it's a little bit hard to see, and each individual piece is, very hard to keep track of if you look at it like this. So we'll just go to the individual portfolios and whatnot, and we can kind of see what's in each one of my portfolios. And actually, before I do this, what I'll probably show is all the different types of portfolios I do have. So I have an individual brokerage account, an IRA, the money that I invest, the YouTube income that I get from the ad revenue from you guys visiting the channel, so I appreciate that. Computershares, some work shares that I get, share owner services, which used to be part of Wells Fargo, but I believe they recently sold it off to a different company, so I didn't get involved in that. And then I have my emergency fund, which I recently kind of depleted to pay for additional investments in my IRA. Before I kind of go forward, at the moment, 2019 is looking at about $7,600 in terms of dividend income or passive income through interests and whatnot with that. That's not including YouTube income. That's not including money from my 401k. But what that does include, what it also doesn't include, is future investments. So any additional investments that I do, whether it's through bonuses, regular income, monthly contributions, that's also not included in here. So this is just what I have invested today, and if any stocks cut any dividends or anything like that. So I'm looking at about $7,600, which is just over $600 a month. In fact, it's $633 a month, which is great. And in terms of where I am, that's already a 34% increase over last year. And that's just, partially because I was investing all throughout last year. And now I'm going to get 12 months of dividend payments from all the companies. Whereas before, I might have only got one or two in 2018. And in terms of where my goals are, 8,500 is where I want to get just from dividend income. So I'm still about 16% off of that. So I believe what I need is another $25,000 to $35,000 to meet that. However, I'm going to be in the same situation I was last year, where investing throughout the year, you might miss a dividend payment here or there. So in actuality, I'm going to need a little bit more than $25,000 or so to get this 8,500. But I'm cautiously optimistic I'll be able to reach it. So let's go back to the portfolio. The portfolio really separated into multiple different things. And I have plenty different columns on here. I'm trying to forecast future dividends, what have you. But what's really important is your dividend yields, yield on cost, which is kind of a pointless measure, but some people really like it. Payout per share, how many shares originally I had, how many shares I have now. If I were to reinvest the dividends, how much could I have? Now I can kind of talk about that as well in a little bit. And what kind of price that I bought it at. Price per share, which is now, and then the entire position's cost basis and current value, return, and forward annual payout based off of everything. At the moment, this is kind of cool. In terms of my highest forward annual payout, it's Realty Income Corp, ticker symbol O, which I have about 210 shares of, and they pay about 22 cents, 22.6 cents every share for every month that you own it. So in terms of, each share pays about $2.71. So since I own 210 of those, it gets me just over $500 a year, which is absolutely phenomenal. And that goes directly into cash every month into my account. I used to do automatic reinvesting, but with this individual brokerage account, I'm starting to get so much cash coming through, and I'm continuing to add capital to the portfolio, that it makes sense that instead of potentially investing in something that's higher value, I could buy something that's, lower in price at the moment. Like last month, if I had an additional $2,000 to $3,000, maybe I would have bought more Wells Fargo, because that was heavily down, instead of buying something like Google, which has been run up. Recently, it was kind of come down, but it is what it is. So in terms of recent additions to the portfolio, AbbVie, Bank of Nova Scotia was relatively new. BP I've had for quite some time. Canada Sweden probably purchased at a wrong turn. It's down almost about 45% or so in terms of when I bought it. Chesapeake, I bought at a horrible time as well, but I'm hoping for a turnaround there with the new merger. Cheniere Energy Partners was about 6-7 months ago, and I've built a pretty decent position for that, hoping for long-term dividends as LNG starts. That's paying me about $300 a year. It's phenomenal. Google is the largest ad, in my opinion, one of the best ad companies in the world, and it's starting to gain a lot of traction internationally. So in my thought, it's a $800 billion, $700 billion company. It's not going away. Its revenues are continuing to grow at a massive rate. Eventually it's going to start paying a dividend, and I want to be a part of that for sure. So Icahn Enterprises is a conglomerate of different things run by Carl Icahn. You got Kinder Morgan, Main Street Capital, which is a business development company, Altria Group, which is wines, cigarettes, cigars, things like that. Realty Income Corporation, which is a triple net lease company, around 210 shares of that. Pepsi, which was a great buy when it dipped into the high 90s, probably, 6 months to a year ago. I bought 53 shares or what have you at $98 a share, which was a good purchase price. And immediately jumped back up to the 105, 110 range. So it's kind of been hanging out there the past 6 months or so since I purchased it. Phillips 66, which has been a good price. Been steadily reinvesting those dividends. Got about 3 shares worth as I've been reinvesting them. And purchase price at about $74 a share, which is pretty good. Royal Dutch Shell purchased a decent bit at one point. I think I sold some of them at about 200 shares, and with one of them, I think they popped up, 5 to 10%. I took a quick win and sold a portion of them off, but made sure that I kept a decent chunk of them. Seadrill Partners is kind of a speculative play on the oil industry, making sure that I'm able to get a good dividend from it, but it's also risky that the dividend might be cut. Square, some of you may recognize that I had a call of Square, that I had sold a covered call for Square. So those 100 shares associated that were gone. I still made a profit, almost 100% of my money on those, but limited it. I could have made a little bit more, but since I sold the covered call, I limited that profit. But I still had 7 shares left over, so I'm holding on to those. And those are up at a good point. I bought them at $22.5, and they're at $72 a share. So that's, over 200% increase in price. Stag Industrial is a warehouse sort of real estate investment trust. And then you have Starwood Property Trust, which is a mortgage real estate investment trust. So we sell mortgages and whatnot. I've had this one for quite some time, as you can see. I initially bought 50 shares. Ended up with about 65 shares worth of the corporation. So that's pretty nice because although the dividend doesn't really change too much, it's actually never changed since I purchased it. It now means that I'm getting a decent amount more than what I was before. It's good for $125 a year. Then you have AT&T. I've recently just bought another 100 shares of this as it was down to the 20 range. So my cost basis for this is in the $31 range. Not too horrible, considering it gets $2 a share, so over $400 some a year just from that company. Verizon, very similar, 100 so shares associated with that. And Wells Fargo, 200 some shares associated with that, so just over $300. Overall, my individual brokerage account is around $4,600, so that in combination with me continuing to invest however much money I do every month, I'm able to combine whatever dividends come in that month with whatever I put into the portfolio and invest into new share purchases. My YouTube Moolah account is a lot of fun. So I basically take all the money that I've made from YouTube, which at this point is around $1,000 or so, invested in shares in the S&P 500, total stock market, small cap S&P, and luckily for me, I'm able to invest in dividend stocks, and with that $1,000 that I've invested so far, I'm making about $20 a year off of it. At the moment, I'm making around between $50 and $100 every month from YouTube revenue, so I appreciate you guys always stopping by and supporting the channel. And so that means every other month or so, I get a check from Google, and I'm able to reinvest that into the YouTube Moolah account. So that's a lot of fun, and cool to watch that go. And I also have a series associated with that, so I'll put that on the upper right-hand corner if you guys aren't too familiar with it. It's been a while since I made a video, so maybe next time I get another payment, which I believe should be this month, I will make another video associated with that. And then my individual retirement account, this is where I generally put about $5,500 a year since 2013 timeframe. And luckily I've been able to build this up to around almost $40,000 at this point in terms of value, which is about a 40% return. Really? Wow, okay. Not bad. So BHP has done phenomenally for me. I apologize for that. And once again, I also bet about 100 or 200 shares associated with this, and sold off 100 of them when I think I made 10 to 15%. So unfortunately, sold off way too early because I should have held on to them. Then you have Cyrus One, which is a data real estate investment trust. So they make data storage units, and those actually, they make those and they basically rent out space and servers for other computer companies and whatnot to lease from them, essentially. In terms of other companies that I have, Disney has been a staple in my portfolio recently. Bought another 25 or so shares associated with that to get me to an even 50 shares, getting my cost basis down to about $103 a share, which isn't horrible, but it's not phenomenal. Bought a little bit late. Wish I bought a couple years ago, but I have the shares, and it's paying me $1.76 a share, so just good enough for just under $100 a year. Another thing I need to mention, BHP just announced, due to the recent deal, that they sold a bunch of their Permian Eagle Ford assets to another E&P company, that they will be paying a special dividend of about $2 a share. So since I own just under 126 shares, that ends up being a special dividend of like $256 or so. In fact, I just wrote it, so I should be getting it at the end of the month. So it's about $258 for this January, and of course they distribute their normal dividend biannually in March as well as September. So should be a great repurchase of that. I believe I'm just going to reinvest it back into the company, so it should be another 4 or 5 shares of additional BHP that I'm able to purchase with that. Maybe actually closer to 6 shares. Yeah, closer to 6 shares. So phenomenal. Be able to purchase that at $40 a share or so, and that will be able to provide me with additional dividend income for the rest of my life. I have a high belief that BHP is a phenomenal natural resource company, so I'm very long in BHP. First Solar, this is a company that I purchased at a very low price. I used to own also additional 100 shares or so. As a portion of those shares went positive in terms of rate of return, I sold a portion of them off. My cost base is down to 31, but prices of this have recently, in the last year, been up to $75 a share. So I believe as the turnaround in their Series 6 rollout for their solar panels, prices have somewhat come down as they are still working on getting their operating margins up. So I'm confident that since their other competitors are still running at a loss, First Solar in the long term will be a phenomenal investment. They have very little debt, massive amounts of cash in terms of how much they have, how much their company is worth. I believe their company is only worth in the $6 to $10 billion range. They have $1 billion on cash, maybe closer to $2 billion on cash. So by any means, I'm not hurting for money associated with that company, and can fund everything from cash from operations. So I have a high belief that this is a phenomenal company to own for the long term. Icon Enterprises again, Philip Morris, which is an international part of the cigarette company. One of the things I didn't mention about my Altria Group position, which I have in 2 places, my individual brokerage account as well as my Computershares account, which I'll get to in a minute, is their recent purchase in Juul, which is about a 35% purchase in vape maker Juul, which is a belief that alternative smoking products are here to stay. Smokeless products are here to stay. That's evident with people switching to, vaping or heated tobacco products or what have you. More additional investment in Verizon here, and then you have WP Carey, which is another triple net company. What I like about WP Carey is that it also has land in the UK and Germany as well, so it has some European exposure, and I believe, I don't know exactly what the percentage is, but it's close to either 30 or a third of their entire portfolio is in the European sector, so I believe that that is a positive. Instead of strictly focusing on the United States, it has an international foothold in Europe. Well, international meaning it's just Europe. So it's not really international. It's just a different continent out of the 7 that we have. Or we have more than 7. Anyway, so really interested, instead of just focusing on Realty Income Corp, which is 49 out of the states or 48 out of the states, WP Carey is focusing heavily on the United States as well as portions of Europe. So additional investments in Abby and my Computershares account. Oh, before I move on, so my IRA is good enough for about $1,500 a year. So that, including my individual brokerage account, is a decent chunk of change. And then you have my Computershares account, where I have a lot of the things that I have invested in my other portfolios and my other accounts, like AbbVie, Altria Group, Philip Morris, Realty Income Corp. But the other items that I don't have in other accounts is WTR, which is Aqua America. It's probably one of my only utility companies, but it's a water utility company focused heavily in the Northeast and I believe Georgia and Texas for water utility billing and whatnot. So very small position in this. I should have continued to purchase, but in Computershares you can have a direct purchase with the company, so you can almost eliminate the brokerage or whatever company holds your shares on your behalf. And so with that, you're purchasing shares without any commission in most of the time. So with respect to Aqua America, I was purchasing $50 to $100 every month. And then I started investing in other things and I completely forgot about it. So I was able to build a position pretty large in the $25 range, and now it's grown by about 40%. But I wish I continued to buy because it's a relatively decent dividend growth stock that doesn't get a lot of publicity and is continuing to grow every year. So Dr. Pepper Snapple, one of the things I didn't cover with Dr. Pepper Snapple last year is they merged with Keurig Green Mountain, and I ended up with a phenomenal dividend payment that I didn't really include in my dividend payout, which I now in retrospect should have. But anyway, I can make a different video on that because it's quite a cool story. Exxon, IBM, which has been a relatively crappy investment associated with where I was purchasing at in the $150 range. But it still pays a decent dividend, so I'll keep it in the portfolio, at least for now. Maybe until it breaks even, but Warren Buffett is out of it. Maybe I should be too. I don't know. Additional 21 shares of Philip Morris, a couple shares of Realty Income Corporation. Clorox, which I wish I purchased more of. I was buying it, $50 here, $100 there, getting over the course of like a month or two, and really wish I had purchased more. It's up over almost 100%, and the dividend continues to grow. So it's $3 a share, or almost $4 a share in dividends. And you have Waste Management. That was another company that I wish I never stopped purchasing every month. And then you have a couple other shares. So these I don't ever really keep track of. So these could be a lot larger. Not a lot larger, but a share here, a share there in terms of where they are, in terms of growth. But I lost the account information associated with these guys, so I'd have to call the company to be able to get my login. But it's a very small portion of my portfolio, $20 or so of income. And I don't purchase automatically associated with these. Everything below is mostly just associated with my personal savings account, where I have an emergency fund, which is kind of depleted at the moment because I transferred a lot of that to my Roth IRA. As you can see, I have a decent amount of change sitting in my Roth IRA. Don't forget, you can put $6,000 in instead of $5,500 this year. Please take advantage of that. So as we're waiting essentially to, I guess, fill back up my personal savings account and my nest egg in case of emergency, I'm kind of just waiting, biding my time, really just trying to reach my investment goals this year. But I really hope that this was an informative video. One of the things that I want to show you guys, so that way you guys understand this is fully transparent. The portfolio I just walked you through is everything in the blue to the other blue, this lighter blue to this more deeper blue. This 39% here, which is my 401k, I did not cover. That is currently sitting in an income, Goldman Sachs income fund, basically because of my uncertainty with the relative stock market. So while I have a decent amount of cash, which is that income fund, which doesn't lose any money because it's all short-term investments, I basically have everything else invested, hoping to get dividend income, because that's the goal, is dividend income to reinvest to buy more dividends. Personally, I would prefer a correction because I feel as though I'm stable with where I am in my job. I feel like I'm stable in terms of where I am in terms of financial stability. So the stock market hitting a 20 to 30% further correction for me would be beneficial. I would start taking this 39% of my portfolio and slowly dipping it back into the S&P 500. In fact, I did that before Christmas. Christmas Eve, there was that large drop, right? The 2.5–3% drop. That evening, I said, put the money back in. And the next day, that Monday, when it opened back up, or that Tuesday, or what have you, after Christmas on the 26th, it jumped up 2.5–3%. And I said, you know what? 2.5–3% is good enough for me. Quick in, quick out. And I made 2 to 3% on this 30%. So it ended up being like another 0.5% on my portfolio for the year. So I was ecstatic with that. But could I have left my money back in and made another 5–10%? Yeah, but who knows? I mean, the market could decline, another down to the 2,000 range in the S&P 500, 1,500 range for the S&P 500. So, I'd rather be conservative and be partially invested in this 60% of the portfolio, and the other 40% be, kind of conservative with the cash on hand. So, anyway, truly appreciate you guys stopping by the channel. If you have any questions about what I'm invested in, why I'm invested in it, or just any other sort of investment, guidance, while I'm not a investment professional and I can't technically guide you, I like to share my journey with you guys for entertainment purposes and for maybe just general education. Don't ever necessarily utilize my videos for actual investing advice. Rather, use it, discuss it with a professional, and get their opinion before you make any rash decisions. I'm long all the stocks that I mentioned in this video, and that's really it. I'll catch you guys for another video. Ask anything in the comments section, and I look forward to seeing you guys then. Take care.